What if you could own a piece of Apple, Google, or Tesla with the money you'd spend on a new video game or a night out? Sounds impossible, right? For most people, the word investing brings up images of Wall Street, complicated charts, and needing thousands of dollars just to get started. But what if I told you that the single biggest barrier to building wealth has been completely removed? That you can start today, right now, with just a $100 bill and your smartphone. Don't skip this video. The next 7 minutes could be the most important financial decision you make all year. I'm going to show you, step by step, how to turn that $100 into a real investment in the world's biggest market. Okay, so how is this not just clickbait? Two powerful concepts have completely changed the investing game for beginners: fractional shares and zero-commission trading. First, let's talk about fractional shares. A single share of a big tech company can cost hundreds, even thousands of dollars. In the past, if you didn't have enough to buy one full share, you were locked out. But now, with fractional shares, you can buy a slice of a share. So with your $100, you don't have to buy a cheap, unknown stock. You can buy $100 worth of Amazon or Google, or any company you believe in, even if the full share price is $2,000. It's exactly what it sounds like, a fraction of a share. You own a piece of the company, you get dividends proportionally, and your investment grows at the same rate. Second, zero-commission trading. It used to cost $5 or $10 every time you bought or sold a stock. With a small $100 investment, those fees would eat up your money instantly. Today, many major brokerage apps have eliminated those fees for stocks and ETFs. That means 100% of your $100 goes to work for you. Now for a reality check. Is this $100 going to make you a millionaire by next year? Absolutely not. Investing $100 is not about getting rich quick. It's about three things. Building the habit. Getting started is the hardest part. This is about creating the routine of saving and investing. Learning the ropes. This is your learner's permit for the market. You'll learn how platforms work and how the market moves without risking a lot of money. Harnessing compounding. Even small amounts invested consistently over a long time can grow into a significant sum. It's about time in the market, not timing the market. Ready to do this? Here are the 3 simple steps you need to take. First, you need to pick where you'll invest. You have a few great options, and most have no minimum deposit to get started. For the hands-off investor, look at robo-advisors or micro-investing apps like Acorns or Stash. These apps are designed for beginners. They'll ask you some questions about your goals and risk tolerance, and then automatically invest your money in a diversified portfolio for you. Some even have a roundup feature where they invest your spare change from daily purchases. For the I want to choose investor, if you want to pick your own stocks and ETFs, you'll want a modern brokerage app. Great choices in the US include Fidelity, Charles Schwab, or Robinhood. All 3 offer fractional shares and zero-commission trading on stocks and ETFs, making them perfect for starting with $100. This part is surprisingly easy and takes about 10 minutes. You'll download the app, enter your personal information like your social security number in the US, and link your bank account. It's a secure and standard process. This is the big question. With $100, you shouldn't overcomplicate it. Here are 2 fantastic, time-tested strategies for beginners. Option A, the buy the whole market strategy, ETFs. The simplest and most recommended path is to buy a low-cost S&P 500 ETF. An ETF, or exchange-traded fund, is a single investment that holds hundreds of different stocks. The S&P 500 is an index of the 500 largest companies in the US. So by buying an ETF that tracks it, like the Vanguard S&P 500 ETF, ticker VOO, or the iShares Core S&P 500 ETF, ticker IVV, you're instantly diversified. These funds have incredibly low fees, often just a few dollars per year for every $10,000 invested. For $100, you can buy a fractional share of one of these ETFs and own a piece of the entire US economy. Option B, the blue chip stock strategy. If you want the thrill of owning specific companies, Use your $100 to buy fractional shares of 2 to 4 large, stable blue chip companies you know and use every day. Think Apple, Microsoft, Amazon, or Coca-Cola. This is less diversified than an ETF, but it's a great way to learn about individual stocks. Now for my friends up in Canada. You can absolutely invest in the US market, and it's a great way to diversify. Here's what you need to know. Choosing a brokerage. You can use Canadian brokerages like Wealthsimple, Questrade, or even direct investing platforms from major banks like RBC. These platforms give you easy access to US stock exchanges like the NYSE and NASDAQ. Currency exchange. Remember, you'll be converting Canadian dollars, CAD, to US dollars, USD, to buy these investments. Your brokerage will handle this, but be aware of the currency conversion fees, which can impact your returns. Tax forms. Don't worry, it's easy. When you open your account, your brokerage will have you fill out a W-8 Ben form. This is a simple form that certifies you are not a U.S. resident for tax purposes. It's crucial because it reduces the U.S. tax on any dividends you receive from 30% down to 15%, thanks to the tax treaty between the U.S. and Canada. Consider Canadian-listed ETFs. An even simpler option is to buy a Canadian-listed ETF that holds U.S. stocks. For example, funds like the Vanguard S&P 500 Index ETF, VVF, or the iShares Core S&P 500 Index ETF, XUS, trade on the Toronto Stock Exchange in Canadian dollars but track the U.S. S&P 500. This way you get the exposure without having to worry about currency conversion yourself. So you've invested your first $100. Congratulations, you are officially an investor. But the real magic isn't in that first $100. It's in the next one. The secret weapon to building wealth is consistency. Set up an automatic transfer of just $25 or $50 a month. It might not feel like much, but over 10, 20, or 30 years, the power of compound growth can turn those small, consistent investments into a life-changing amount of money. Your future self will thank you for starting today, not tomorrow. So here's my challenge to you. Take one of the steps we talked about today. Download one of the apps, open an account. It takes 10 minutes. You don't have to deposit money right away, but take that first critical step. If this video gave you the confidence to start, please hit that like button and subscribe for more nonsense guides to managing your money. Let me know in the comments below, which platform or investment are you thinking of starting with? Let's get this conversation started. Thanks for watching and happy investing.